Hi, and welcome back to my series on how to create financial freedom. Because some of the steps that I've discussed already are so important, I'm going to put a link to the entire series up in that corner. Last week, I talked about savings. Now, to me, you save for a specific goal. For example, creating an emergency fund, or saving up for maybe a down payment on a house, or a vacation you want to take. In fact, right now, I'm setting aside some money in a savings account for a big trip I want to take this winter. Investing has a very different goal, and that goal is to amass money to pay for your future. Really, what you're doing is not so much accumulating money, you are accumulating freedom, options, the ability to live your life the way you want to do what you want to do, when you want to do it, with who you want to do it. So, with investing, we are looking at long term. Now, there are more ways to create financial freedom that I'm going to get into detail on here today. Some of them may even work better for you than the ways that I've done it. But I have a hard and fast rule. I do not take advice from someone who has not done what I want to do. I will only learn from people who've succeeded. So, because I have that rule for myself, I try and impose that rule when I'm talking to other people. So, I'm not going to give you any specific advice on these other ways, but stick around. I will mention them, and it's something you may want to consider. I created my financial freedom through investing, and specifically through investing in stocks that pay me dividends. This way, I never have to touch my principal. I have enough income coming in just in dividends alone to cover my lifestyle and then some. In fact, because I have invested in a lot of dividend aristocrats, my income goes up each month. Last year, I averaged a raise of about $500 a month. Again, that's an average. Some months it went up very little, some months it went up an awful lot. But the stocks that I buy are increasing their dividends. Now, if I was starting out, I would invest in exchange traded funds, ETFs, specifically in broad market, low cost, passively managed ETFs. What this means is the ETF that I own simply owns the entire stock market. I own a couple like that. One owns basically everything on the Canadian stock market, another invests in a lot of international funds and international markets. That way I get worldwide coverage. The fees are very low and they grow very nicely. Another thing to consider would be REITs, real estate investment trusts. And when you own a REIT, you own a security that basically owns some type of real estate. It might be commercial real estate, it might be senior citizens' homes, it might be apartment buildings, it might be strip malls. There's all kinds of REITs out there. Do your research on them, though, and make sure that you're buying a REIT that has a payout ratio that is consistently lower than 100%. If it's above 100%, it means it's paying out to you more than it's actually making. That's simply not sustainable long term. You can easily find out the payout ratio of any REIT simply by Googling it and asking for the payout ratio. In my own investing, I do a hybrid approach. I invest in ETFs, I invest in REITs, and I also invest in individual stocks. As I said, if you don't know a lot about investing, start out with an ETF. It's kind of hard to go wrong if you look at some of the big ones like, say, Vanguard or BlackRock. But if you get a little more confident and you want a little more chance to grow your money, look at dividend aristocrats. This is where the bulk of my income comes from. A dividend aristocrat is a company that pays out dividends very consistently. To reach the status of dividend aristocrat, it has to pay a dividend for 25 successive years without missing any, and it has to regularly increase those dividends. There's where that raise comes in that I talked about. Some of the stocks that I own have been paying dividends for over 2 centuries. They're not hard to find. As I said, I have a rule that I only give advice in areas in which I have some expertise, some knowledge, some experience, and investing in those three types of things have paid me very well, and that's what's supporting my lifestyle right now. In fact, I've been retired for 2 years, and only this month am I starting to collect pension income. But something else you might want to consider would be real estate, owning individual properties, either by yourself or in a partnership. You could invest in rental properties, apartment buildings, commercial real estate, basically anything out there that you might be able to charge rent for. Now, there's a little bit of a barrier to entry here because you are going to have a down payment, and I wouldn't do this unless you had some reserve cash. You can count on your tenants making the mortgage payments and covering repairs and maintenance, property taxes, insurance, and so on. But if you have a property that's sitting empty for a while, you're going to have some cash to cover that. I know numerous people who've invested very successfully in residential real estate. They've made a lot of money from it. They have some cash flow coming in. And when they sell the properties, they're going to have some excellent capital gains. But again, not something I've done personally, but something you might want to look into. The other thing is to start a business. Now, starting a business takes time. You're not likely to open the doors and have instant cash flow and instant customers and instant profit. It's going to take you a while to build up, and you might need some cash to keep it going for a while. But the potential to expand and scale the business is almost unlimited. So if you have time, if you have the energy, if you have the interest, it is something that you could definitely look into. Extreme case would be someone like Jeff Bezos, who started selling used books in his garage, which eventually became Amazon, the everything store, one of the wealthiest men on the planet. So those are some other things to consider. As I mentioned earlier in the video, if you're just starting out, if you don't have a lot of money to invest, a good way to start might be a passively traded broad market ETF from one of the big companies such as Vanguard, BlackRock. A lot of the major banks have their own too. Do some shopping around, see what looks good to you. I use a trading platform that does not charge me any monthly fees. They don't charge me to buy or sell securities. That means I get to put all my money to work immediately and don't have to pay anyone to do it. Again, shop around for some online platforms that are available in your country, in your area. The important thing with investing is to build that freedom, to have those options available to you. You have to start. Start small if you have to, but start. Thanks for watching. I'll see you next week. And in the meantime, here are some other videos that you can check out.